the Grind to Growth to Greatness podcast. The best and brightest entrepreneurs, CEOs, creators, athletes. We'll talk to them all, and we'll get the good, the bad, and the ugly on how they made it. Decoding the secrets of success. And now your host, Terry Barr.
Hey, welcome in today. I've got a special guest today. I've seen her twice now. Her name's Dr. Jessica Lautz, and she is with NAR, the National Association of Realtors. She is the Deputy Chief Economist and VP of Research. That's a lot. That's a mouthful. Very interesting lady. I enjoyed seeing her. I've seen her twice now, once in Miami and once in Northern Virginia. And after the Northern Virginia, I said, I have to have her on. The information is terrific. And she's very entertaining as well. So sometimes I would say economist and entertaining don't go together. I don't know, but she was very entertaining. And I loved her, or both of her speeches. So Dr. Lautz, welcome in to our show, Grind to Growth to Greatness.
Thank you. I'm super excited to be here with you today. And it was great being in those last two events. And I have to tell you, after this, I'm headed to the airport to jump on a plane to head to my third Coldwell Banker event very quickly here.
Well, I'm proud of Coldwell Banker because you're an important guest. Different information than we normally get, but it's important for us to know our market, know the economy when it comes to real estate. And to have you on has really been a treat for me. I'm kind of a nerd that way, but I really enjoy your information, really enjoyed your presentation. So I want to jump right into it. You did a profile of home buyer and seller. Now, if an economist is typically a lot of statistics, and so we want to jump into those, but I also want to ask you a few questions on what your thoughts are on buyer and seller mindset and what we can do as realtors to obviously better our service to our clients. Make sense?
Yeah, no, absolutely. I mean, so we've been doing this report since 1981, not me personally, since 1981, but the group has been. And I have to say, it's really interesting data this year because it shows such a divided real estate market. It shows the struggle of first-time homebuyers dropping to the lowest level we've ever seen in our data in 43 years of history. The highest age for first-time homebuyers we've ever seen. They're now closer to 40. Yeah. Frankly, than they are to where they used to be historically around 28, 29 years old. But then on the exact flip side, we have the highest share of all cash buyers. We have tremendous wealth being gained in the real estate market today because home prices keep going up.
Yeah, I think it's amazing as I go through it, and I'm not a statistical guy, but a lot of the statistics in this report kind of connect. You know, the higher first time home buyers buying the multi-generational homes, taking gifts from parents, which would indicate higher down payments and some of those things. So talk to me a little bit about the first time home buyers. There were some interesting things in there. Like you said, it's decreased 24%. It's been difficult in our market, obviously, and across the board for first time home buyers. I mean, they're having a hard time competing. They don't have a lot of cash. There's multiple offers, those kinds of things. So talk to me about first time home buyers.
Yeah. So first-time homebuyers are encountering a real estate market in the last year where we know that interest rates topped nearly 8%, so the highest rate in the last couple of decades. We also know that home prices keep going up and there's still limited inventory. So those are the big three drags within the housing market. But then if we look outside the housing market, we know it was a high inflation economy. Student loan debt payments resumed October of 2023. So that's something where there was a pause. People could get ahead of their debt. They were able to pay down other debt perhaps. But then once that resumed, that's once again a debt to income leg within someone's budget and something that they have to chalk away at once again. And then we also know just the high rental costs too. And so if people don't have the opportunity to move in with friends or parents and cut paying rent, they have to pay rent while they're trying to save for a down payment. And that's just impossible.
Yeah. And so tell me about, how that connects to. I mean, we have a nationwide shortage, obviously, in homes, and I couldn't find the graph. I saw the graph yesterday, and then I went back to find it. I couldn't find it, but I think it's somewhere around 3 million shortage from like the late 90s or the early 90s. Tell me about how do we catch up? That's all affecting down the line. It's kind of like that trickle down effect for sure.
Yeah, no, absolutely. So we actually estimate we're short about 5 million homes in the US. Yeah. So there's lots of estimates out there. And I don't know that anyone has the real precise figure.
Yeah.
But what I can tell you is that the level of home sales activity that we have today is the same level that we had in 1995, but we have 70 million more people in this country. So if we are tracking at that same level, we know that we're short homes. We know that there's a lot of people doubling up. There's a lot of pent up demand in the housing market today. We know that people are living longer. They're thriving longer. They're not leaving their primary residence home. And so we can't look at older adults for that as a solution. What we really need to do is build more units. And whether that's smaller units with adaptive reuse, thinking about renovating vacant malls, hotel motels. I'm hearing a lot of success on the hotel motel front because it's really just adding a small kitchen burner, a small refrigerator into those units. It can be a quick way to add those units in.
So are you hearing those as far as from a rental standpoint?
I'm hearing them for purchase as well,
Oh, wow.
for both. And so, yeah, that could be a solution. Also renovating vacant schools. We know that birth rates are down in this country. We have empty schools. Some of those have been made into breweries. That's cool. Why don't we make some apartments out of those too? Right. So looking at the vacant buildings that we have in communities.
Yeah. And that's a conversation I had with a developer here not too long ago, a couple years ago. We were talking about the commercial side of things and how, walk-in malls and those kinds of, what are we going to do with those spaces? And I said to him, those would be great to repurpose into some sort of, I don't know, senior living, all-inclusive senior living or some sort of condo situation. And I haven't seen a whole lot of that around central Pennsylvania, but it seems like that is something that's a viable solution, I suppose.
Yeah, absolutely. And there are communities that are taking vacant malls and making them into multi-use places and putting residential units in there too. And I think this is where there's opportunities. And every community has a different type of vacant property. And you said senior centers. What's interesting is that some people are actually looking at nursing homes that are vacant now and assisted living homes to bring in apartments and to bring in condos into those spaces. It's not like we don't have an aging population. We certainly do. But there's really a desire right now for a lot of people to move into family settings. So to be with their family, multi-generational buying, ADUs on a family's property. And so nursing homes across the country after COVID, those are vacant too in some communities. Yeah,
I was surprised at the multi-generation. I mean, since 2012, it's pretty stable, but 17% of people are buying into the multi-generational things. And that was for a myriad of reasons, be closer to family, services, help, those kinds of things. But I have to believe that some of that trickles over into the adult children that just can't buy their own houses out there.
Or you can't get rid of. Yes, they're moving in, or they boomeranged back. Yeah. No, absolutely. Yeah, it's all three, and certainly we can imagine a family where they're meeting all the needs there: cost savings, having an elderly relative, having a kid over the age of 18. We don't collect data on this, and I always regret it every year. We really need to note this down. But I think childcare and elder care costs are probably being met in that scenario too. We know that daycare is quite expensive in this country. Childcare costs are expensive, so having an extra set of hands could be quite helpful. Yeah,
since we've become this mobile society that we can connect with, every piece of technology possible, people are going further away, or at least they did in the past 20 years, going further away from mom and dad. And according to your statistics, it said that now the distance between the resale or the repeat buyers is shrinking. It's going more like, I'm going to move 10 or 15 miles away from where I used to live, or 20 miles versus 50 or 60. And then you got like you said, the kids coming back in. So that was an interesting connection to that. One of the interesting pieces that I heard twice on your conversation was talking about single home buyers and the increase of single women buying homes. And I wanted you to talk to me about that because it's like a huge number, 20%. So there's a whole string of things there that are connected to that. And talk to us about the increase in single women home purchases.
Yeah, single women are really pretty incredible. And I have to say this because if you look at the metrics, if you look at the data, you're seeing a home buyer who has the lowest household income of everyone else, but she's outperforming. She is buying homes at a higher rate. So if we look overall, it's 20%. If we look at first-time home buyers, it is a quarter of the market.
Yeah.
And she's having to save for a longer period of time. She's 40 years old as a median age in comparison to single men who are in their 30s, low 30s actually. But she is making a lower income. So she's having to save for a longer period of time to get there. But she says that this is important to her. She's changing her financial priorities. She perhaps is moving in with family first to be able to save, taking on a second job. So really making this a priority. And I have to say what I think is interesting here too, is she is more likely to be a caregiver in some years in the data, but not always consistently. So it's not necessarily that she is a single mom. This is not necessary for her to purchase. She just wants that stability of home ownership. Yeah.
So anecdotally, and I want to kind of go to you for this, but what your thoughts are. Do you think it's a change of mindset? Because I feel like women are really rocking in a lot of areas. And you call them single women or married women or whatever, but I feel like women have kind of caught their stride and have caught up to where they should be. Anecdotally, what do you think the mindset change is there, or if there's any statistics to back that up?
Yeah. So back in 1981, men and women were about the same level. They were about 10% of all home buyers. And then quickly, women just continued to outpace men. And when we get into really the boom years, women were more than a quarter of the market. They were really outperforming at that point, single men. And I don't know what the change in mindset is, because if we look back in the 80s, it was just a few years out of women legally being allowed to even hold their own credit card, let alone buy their own home. So, right. So it really is crazy. And I'll talk to older relatives. I'll talk to my godmother who's in her 80s, and she'll tell me about how when her father passed away, her mom had to go to the bank with uncles to be able to stay in their home. And that's just, it is crazy. And so maybe it's just wanting that stability and not wanting to have those unknowns of not knowing, do I have to move next year because my landlord is going to increase my rent? Do I have to move school districts for my kids or elder care, and thinking about all of these options, but women just saying, I need this stability in my life.
Yeah. And I think the societal, I don't know, you can call them what you want, societal kinks or societal problems in the past. I mean, it seem like they're finally getting ironed out to the point where they should. And women are taking that very seriously and saying, hey, now that I have, opportunity, I'm going to do what it takes to make those things come to fruition. I mean, I know my mother-in-law, she's, her husband recently passed away a couple years ago, and she didn't take care of any of that stuff. So it's been a learning curve for her. And it's been interesting, teaching her how to do certain things. But, that's a generational thing that's, hopefully working its way out. But I know that characteristics of home purchases were something that was interesting to me. And we could talk about new homes. I think 15% of the homes are being purchased are new homes, obviously trying to avoid renovations and problems with, I think, electric and plumbing. And 85% are previously owned. I guess there's a perceived value there. Tell me about the new home. I do a lot of new homes. Tell me about the new home supply. Tell me about, that versus the resale and what you're seeing statistically and which way we're going there.
Yeah, I think there is a demand for new properties, but of course, those come with a price premium, or traditionally they've come with a price premium. What has happened actually in the last year is that we've really seen that existing properties are closer in pace with the price of new homes.
It's true.
And I think that has to do with the bidding wars that we're seeing. Even though those new homes have all the bells and whistles and the beautiful counters and everything that goes along with it, perhaps more energy efficient than new systems within the home. Homes have gotten so expensive in the US because of the lack of inventory that we're seeing them more on par. That being said, when we look at new home purchasers, they tend to be older because they do have the ability to be able to afford that. And so we are seeing that. That being said, for first-time home buyers, I know that there's lots of opportunities there, perhaps rate buy downs, looking at new build properties as an opportunity to have a lower mortgage interest rate. So over time, we could see that increase, especially if builders increase their activity. Mortgage interest rates overall have gone down. And so with that, builders are a little less reticent, are coming back into the market. Hopefully we'll see more new construction coming in.
Yeah, I worked for a builder, and during COVID, obviously there was supply chain problems, and there was a lot of things going on with materials and labor and those kinds of things. And I think, as we get into this extraordinary market for listing for sellers, they are somewhat hesitant to lower prices or to come back into a market price, if you will. They had to catch up a little bit when they had these supply chain problems, and now they're not as quick, obviously, and that's I guess that's us, but they're not as quick to drop prices or to incentivize or do some of those things because the market is still so hot. I feel like from a supply and demand situation, it's somewhat artificial. I mean, but people are still paying the price. And talk to me about that from a statistical standpoint, if you could. At what point does the sale, the value of a house just is being outpaced by just foolishness?
Well, I think there was probably some of that during COVID when we saw that people were paying, upward. I was hearing stories of $100,000 over the asking price of a home.
Yeah.
That seems steep, depending on the price point in the home. Of course, that can make a difference, but that does seem like there was intensity in the market at that point. That being said, we really don't see using different metrics. So if we look at other folks' data, so CoreLogic, mortgage bankers, we really just don't see that there is delinquencies or many people underwater. So maybe they had the right idea. I don't know.
I guess.
But I think even now, when we have a very sluggish sales market, even now when we know that home sales activity is much slower with higher interest rates than it was during that 2% and 3% interest rate period, we still see about 20% of homes are moving more than the asking price.
Yeah.
Now, I suspect there's pricing strategy that goes into that,
Sure.
In marketing strategy, certainly. But to see that pretty consistently, even in a slower market, does really indicate the lack of inventory that we have and the strong demand that we still have.
Do you have a feel for why the cash buyers are why that's such a high percentage of the buyers on the repeat buyers?
Yeah, it really flipped. So it flipped about 2021 in the data, and it had been consistently. I was really digging into it yesterday, and I wanted to see when that switch happened. It was very consistently about 15% of the market, and now it's essentially double where it was at that time period. What we're seeing is that people are just earning that tremendous equity in their home. So it's nearly a third of repeat buyers are purchasing their next home with cash. That is crazy to me that they're able to do that, but they've been in their home for a long period of time. Traditionally boomers. Traditionally, we're seeing among these all cash buyers too in the last few years, they're more likely to move longer distances. So perhaps moving to a more affordable area in the country. And these are primary residence buyers. I think that's worth noting too. The other thing that we saw that's brand new data this year as well is that 1 in 10 first-time home buyers are buying their home with all cash.
Wow.
Precisely, it's 9%. But I was really trying to figure out how in the world could they do that?
Yeah.
Well, we have the highest share this year of first-time homebuyers who are using inheritance for their down payment or to purchase their home. And so that's where I think we're seeing this. It's 7% of all first-time homebuyers using inheritance.
And that's to me, that's probably something that's going to continue on based on the baby boomers and as they retire and pass away and some of those things, those inheritance gets passed along. That's an interesting statistic for sure. Is this the first year you're keeping those statistics, or is this something you've been?
We've been tracking this back to 1989. So I think that's when we first started tracking that. But this is the highest share that we've seen in our data set.
Yeah.
So yeah, it's pretty striking this year to see that. But then we're also seeing a lot of first-time home buyers use financial assets. So perhaps just wealthier first-time home buyers who can use stocks, cryptocurrency, cash that out, mix it with some inheritance, mix it with some personal savings, and then you have an all-cash buyer, which is mind-blowing to me as a first-time buyer to be able to do that.
Do you track any information on Henry's? Tell me about that.
Yeah. So, we don't define them as Henrys necessarily in our data. So high earners, not rich yet.
Right.
So yeah, I don't know when they will be rich. So what I can tell you is that certainly first time home buyers overall right now are high earners because in comparison to what we see in the general public, just looking at a first time home buyer, their household income has increased $26,000 in 2 years. So yes, they are higher earners. You have to have really a six-figure income to qualify for a mortgage today on the typical price of a home. And that's with 20% down, which typically people don't do for their first home.
Yeah. There's a lot of high spenders out there too, though.
There are, perhaps taking the vacation instead of saving for that.
Right. My wife always says it's all about the experience. So she likes to, she don't want to buy anything. She just wants to, go out and see the world kind of thing. So I understand.
I can't fault her on that.
This episode of Grind to Growth to Greatness is brought to you by Terry Barr. Distinctive Real Estate. Advising families across Pennsylvania and Northern Virginia for over 15 years. Visit the website at terrybarrealestate.com.
I want to switch gears a little bit. I want to switch gears kind of to the real estate agent side of things. Yeah. I know you guys do a lot of research on that, and a lot of it is honestly, it's not surprising, but I want to cover it. Most valued content that folks are using now to find their homes, and the one statistic that I saw was 100%. I think that it was 100% of people use the internet now.
Yeah,
and I was like, okay, I guess that's. Not everybody's got a phone now, but tell me about listings. Tell me about the content that people are using, and then I want to dive into why people use real estate agents, obviously, and where we can do better as agents. There are some areas in here I could see where we can do better.
There's always opportunity for growth.
Right.
So, what we're seeing is pretty bread and butter. It's pretty consistent. We're seeing that people are searching for their homes online, but they're really using their agent to find their home too. But finding your home online is more popular than finding it through your agent. That being said, people want their agent to help them through that process, to help them find that right home, to show them the faults and features in that property, and help with negotiation. Clearly, very, very important in a competitive market. What I think is interesting about this data too is that we see that 88% of buyers are using agents.
Right.
And we know that the buyers' use of agents has stayed very consistent, nearly 9 in 10 using them. And they'll recommend you afterwards. And they're finding their agent through a personal relationship. Either they've used that agent in the past, right, or someone that they trust, someone they love in their life has used you, and they're saying, oh no, I trust this person to find me my home, and I trust them to find you your home. So those personal relationships were really driving the business.
Well, there was no surprise in that. I mean, they always preach to us as agents down, from top to bottom, relationship and trust. Those are the two things. And I've always said, I don't chase the money. I chase the relationship and I chase the trust because those are the two things that will feed you for a lifetime. And the statistics actually bear that out. And so I was, 49% want you to help them find the right home. And then 14% want you to help them negotiate terms. I think that should be higher, obviously, because I don't think sellers a lot of times know some of the strategies out there to help them in negotiating terms. But very interesting. And then 51% relied on referrals in their network, which was kind of obvious. But
I think what's also important too is if they call you, you're the agent they're going to work with. They only reach out to one person. It's not traditional for someone to interview 3 people and then work with one person after determining for a week. If they reach out to you, they're going to work with you because they had a good reference or they have worked with you before. So.
Yeah, and that's the advice people get though. Interview 3 agents, and rarely do I walk into a situation where they, we saw your name or we got referred to you, and then I go in and I give my pitch, and typically they're going to hire me. But the old hire or interview 3 is a good idea, but you're right, it doesn't happen very often, and even statistically, I guess it doesn't. Okay. I guess from a home seller standpoint, it's similar. They're looking for obviously agents trustworthy and honest. The reasons obviously that they want to, which was a little bit surprising that the percentages were different than I expected, but common reasons for sellers to sell. They want to be closer to friends. Home was too small, home was too large, neighborhood become less desirable. I didn't hear a lot about, I need to be closer to services, or I need to be, as I'm getting older, I need to be closer to, that was surprising to me, especially for the baby boomer.
We are seeing that for sellers. And this had happened 2019 in the data, that the first time we saw it, the number one reason to move is actually to be closer to friends and family. And so we're seeing it very consistently. It certainly ramped up during COVID when everyone kind of reprioritized what was really important to them.
Right.
And we've seen it, the top neighborhood choice for home buyers too is, where are my friends and family? And that is crazy to me. Commute time and being convenient to your job. It used to be 10 years ago, more than half of home buyers said that was really important. Now it's about a third. So I think, remote work certainly playing a trend there, but also a lot of retirees, but just priority of what really is important in my life.
Yeah. Are there any other areas that remote work is showing up in your details? I mean, I've seen a couple of, I think 2022 location of home purchase was skewed as far as the graph is concerned. It looked like everybody was kind of moving out of cities and moving into urban areas or moving in. So that was the big time for that COVID. Hey, I'm going to check my values and my priorities. But then the next couple of years, it moved right back in line with history.
Yeah. And so we are seeing a lot of return to the norm right now. So we're seeing city centers people are purchasing in city centers at the highest rate we've seen in the last decade. So there is a return there. That being said, the suburbs are always the most popular in small towns. I think that has to do with affordability though, too, and where you can actually find a place to live and to purchase. So we're certainly seeing that in the data. I also think that when we look at other measures, so we have our Realtors Confidence Index we collect on a monthly basis, a third of home buyers are still saying very consistently they're looking for work for home features. So there's a lot of folks who are at least working from home a couple days a week and need a quiet setting or an office or a den or something along those lines.
Yeah, that's interesting. And I'd be interested to see if that's going to continue or if that's going to lessen over time, simply because you're hearing a lot of rhetoric that companies are saying, okay, we've had our fun at home. It's time to get back in the office. We can't run like this. And so do you see that kind of coming back to a norm as well?
I think that's a big question mark. Yeah, Amazon, Washington Post in the last couple of weeks have both said you have to come back in 5 days a week. And so if other large companies follow suit, I think we will see some changes there. I think it's going to be very hard for people to say, I'll commute 2 hours a day one way. You
Yeah.
may be able to do that one day a month or a couple days a week, but certainly not 5 days a week. And so I think we may see a shift back into city centers. And I think that's probably what we're picking up in the data right now too.
Yeah,
is just that small shift.
Yeah, so I think I've kind of covered all of my questions, but if you could sum up where we're at right now, that's a loaded question. We have about 10 minutes left, but that's like, okay, which speech do you want me to get? But you have some general thoughts on the market and where we're going, and to give some confidence to some folks out there that are really uncertain what all this means.
I think there's some big questions right now, obviously post-election. I'm in the Arlington area, so just outside of DC. So there's always questions about home sales activity post-election, what happens then. We traditionally have seen, so one of our economists did an analysis and took many, many elections looking back in history. And we traditionally see the year after an election, there is actually more home sales activity. Right before an election, people tend to take a little pause and wait to see what happens, even though it could not affect them at all. Financially or where they live, they take a little pause. So we traditionally see that. There's always questions as we head towards the end of the year, regardless of election or not, what's going to happen with interest rates? What's going to happen with home sales? So our forecast for next year is that even though the Fed is still planning on cutting rates, even though that's the messaging that we're getting, inflation's still coming down, that mortgage interest rates probably going to stay in the sixes. So we don't expect that mortgage interest rates will really dip down too much more. It's possible they hit the 5% range, high fives in 2025, but our expectation is sixes. So
what are you telling homeowners? What are you telling home buyers based upon what you just said? What's your advice to home buyers at this point, and even home sellers?
Yeah. So for home buyers, I would say if you're waiting for interest rates to drop some dramatic amount, there's really no need to really do that. And so it's really timing it of where your finances are when you personally are ready to move. But keeping in mind too, that our expectation is for 2025 for home prices to keep going up. So if you're trying to weigh that, it might make more sense, especially as a first-time home buyer, to look in the winter months. It's always a little slower, but that gives you an opportunity to actually talk to a seller, to actually use your agent to negotiate, as opposed to paying premium and plus for a spring market. As home prices go up. For potential sellers, I know there's a lot of people who are locked into those low interest rate mortgages who have no intention of moving anytime soon. So I don't know what to do with them unless they make these all cash purchases moving forward.
Yeah. Well, we've, historically 6 or 7% has been pretty normal over the course of the last 60 years or 80 years or whatever. And we've got two generations that know nothing but 3 and 3.5. And that's that's a hard mindset to break when all of a sudden we're doubling your interest rate, and then we're cutting your buying power down so far. That's hard to get over. But I look, date your rate and marry your house, and at some point you can refinance or buy down.
You can certainly refinance, but also just think about that equity that you're building up over time too, as opposed to the alternative, which you're not. So I think that's always helpful too. And in context, if we look back to 1971, the typical mortgage interest rate, the average over that time period is 7.74%. We're under that, certainly. Sure. So it's certainly a better rate than what you could have had historically. It's just we have short memories, and that 2% and 3%. There's no expectation that we'll go back there anytime soon. At all.
Well, listen, I really appreciate you coming on. I was delighted when I asked you and you said yes. It was such a fun thing to sit and listen to and we only got a portion of it because you had a lot more. But I really appreciate you coming on. I hope this does something for our listeners, agents, and consumers, because not all the agents get to see you, and I was fortunate enough to be able to sit under you twice. So Dr. Jessica Lautz, thanks for coming into our show. I appreciate this, and I hope that we see continued success. I've been on the website for the last 2 days. It's got a lot of information. I don't usually spend time on there, so I'm going to be going back there a lot more going forward. But thanks for coming in. Thanks for being willing to do this for our little show.
Thank you so much, Terry. I really appreciate the invitation. Very happy to chat with you. And if you're tuning in and you're not familiar with NAR, the National Association of Realtors, we've got a ton of stuff. So the easiest way to grab it, honestly, passively, follow us on social media, because you can grab all the information from Instagram, Twitter, or X, and Facebook, wherever you are, we are. Follow us along.
That's awesome. I will put that in the notes so they'll know where to go. I'll put your handles down in the notes, and then I'll also put the website down in the notes too. So if you are a listener and you're like, this is information, good information, I want to get a little more for my money, I'll put those in there. You go follow those folks, and Jessica's been a real big help. So Jessica, thanks very much. Have safe travels wherever you're going, and hopefully we run into each other again.
Sounds great. Head to the airport now to go to California to the next Caldwell Banker event. So
that's awesome. For that. Perfect.
Thank you.
Thanks, Jessica.
Thank you.
Bye. Perfect. Thank you.
Yeah, absolutely.
Appreciate that. Well, you have safe travels, and this will go up probably in a week. Okay, and cool. I'll obviously send you a link so that you can take a peek at it and just approve or whatever. But I do need something from you. I need a profile picture.
Yes, absolutely.
So you can send me a couple, whatever you like, whatever you feel comfortable sending me. I just want to put that in the marketing of it and make sure we get that out. And that would be helpful. So you can just send that to my email.
Sounds great. Thank you so much, Terry. I really, truly appreciate the opportunity.
Thanks. Have a great time and enjoy it. Stay out there a couple extra days.
Yeah, I wish. That would be lovely. Yes.
All right. We'll see you soon.
You've been listening to the Grind to Growth to Greatness podcast. Our passion is to talk to the brightest entrepreneurs, CEOs, creators, athletes, anyone who's made it, and dive into their struggles, their successes, and their secrets. We hope you've enjoyed the show. If you did, make sure to like, rate, and review. We'll be back soon, but in the meantime, you can find us on Facebook and Instagram at Grind2Growth2Greatness. See you next time.